Shalimar Paints, which plans to double its capacity at Nashik, aims to deepen penetration across the country. To talk more about what's up at Shalimar, which incidentally is down nearly 3% in trade today, is the top boss, Ashok Kumar Gupta, joining us here on the phone line. He's the Vice Chairman of Shalimar Paints. Thanks, Mr. Gupta, for joining us here on ET Now. Shalimar Paints hoping to paint a brighter, bigger future, pardon my pun, but that is what you're trying to do with the rights issue, use it to double capacity at Nashik, etc. By when can all of this be expected, and do you have demand for all of this?
Yeah, in fact, the green shoots have already started coming. Even in the Q2, our growth in revenue over Q1 has been around 40%. So we are getting very good traction. As you know, our market share currently is only 1% of the total market. So we have a big potential ahead. With Nashik, we are hoping to increase our market share to 2%. As a result of that, it's possible that our revenues can grow to around 1,000 crores. And at the current EBITDA level of our competitors, it should be a good turnaround.
But Mr. Gupta, you're talking about the green shoots in the economy. You're wanting to paint a bigger, brighter future post this rights issue as well. But let me just look at your recent quarterly performance. If I look at the last set, your revenue growth was muted, which, you have underperformed your industry peers. Your peers have reported double-digit revenue growth. So why is it that Shalimar didn't do that? What has kept you back? Why has your growth been muted when compared to your competitors?
So if we see the history for last couple of quarters, we had problems with regard to working capital. In the Q1 of the current year, we had problems, and because of which our revenues were hardly 50 crores in Q1. And in Q2, by taking care of some measures with the same working capital, we have been able to increase the revenue to 72 crores. And our EBITDA losses have also reduced from 12 crores to 6 crores. So what I'm saying is that just in one quarter, things have improved so much. To take care of working capital woes, we are bringing in to more than 200 crores of right issue. With this, the working capital problem should be a thing of the past. We already have capacities by which we can take the revenues to around 500 crores in a year. And with the expansion, it can go up to 1,000 crores. So if you see, almost we have potential to triple our revenues in a period of 1.5 to 2 years. So that is why we have got all the bright side or bright colors, as you say.
Can you just talk to us about price hikes in the sector? What's happening in terms of pricing, especially with crude being so volatile?
The crude had gone up in last couple of months to an all-time high. And we have been able to pass off around 2 to 3% of the cost hike to the market already. We are planning another hike in the month of December. Fortunately for us, crude as well as exchange rate have gone in our favor. So I think to a large extent, cost implications have been taken care of. Whatever is balanced will be taken care in the month of December. So I think on the cost front, we are quite comfortable now.
Right. And what do you think about, the sort of, volatile moves that are coming in on most of the raw materials? Is it getting difficult to have a strategy in terms of pricing?
Exactly not so. If you see with all the increases which have happened, the impact on our costing is only 2 to 3%. And we have been able to pass it. The market has also absorbed it. Yes, if the movement in the crude as well as the exchange rate becomes very high, then we have pressures, we have problems for the time being, for the interim period till it is adjusted. Otherwise, I think things are much smoother in this area.
Right, Mr. Gupta, thank you so much for taking out time for us.